Hi everyone, welcome back to Smart Credit Bites with Sangeeta. Today I want to have a real and very honest conversation with you. And if you are a credit officer listening to this episode right now, whether you are in your office or maybe you're commuting back home or maybe you are reviewing your files late at night, then this episode is especially for you. I have been thinking a lot about something lately. I have talked so much about MSME, about borrowers, about schemes and policies, but I have rarely talked about you, the person sitting on the other side of desk, the one who has to make those tough calls, the one carrying their targets on their soldiers and portfolio quality on the other one. So today, no frameworks, no any technical word, just you and me. Just a real talk about what it's really like to be a credit officer today. Because honestly speaking, I think you have one of the hardest job in banking, and I don't think people say that enough, right? So let's start it. So let me ask you something, and I really want you to think about this for just a second before answering me. No need to hurry, just think. Okay, take a pause and then answer me. When was the last time you approved a loan and then you could not sleep properly that night? Let me say this, not because you did something wrong or but because you kept playing it over in your head. Did I check everything? Uh, did I miss something? Or maybe what if this goes wrong? I just remember my first big sanction as a credit officer when I entered into the bank. It was a 500 lakh working capital limit. Yes, 500 lakh. And that was for a small, I think, manufacturing unit, yes, in Faridabad. Now, on paper, everything was just fine. The civil was good; it was 720, and the financials were decent. The promoter also seemed genuine during our meeting, but there was this feeling. You know what I'm talking about. I hope every credit officer understand that small voice in the back of your head that says something's not adding up, something is wrong. And then there was the regional manager who was pushing hard. We had quarterly targets breathing down our neck, and honestly, I couldn't point to any one thing that was wrong. But that was just a feeling inside me, a deep inside me. But since it was a pressure, there was so much pressure, quarter and everything. I had to approve that. I approved it because I do not know how do you reject a loan just based on a feeling, right? None of us know. You need just a concrete reasons and you need documents, red flags, right? Now, after 3 months, the account started showing its stress. And up till few months, somehow it was being saved from NPA. When we sanction a loan, we have a pressure of that. No, just anyhow, at least up till 1 year, we need to save. But how much time can you save a loan that ultimately knows that it has to go to NPA, right? And I'll tell you something that still bothers me. Not because just I made a mistake in the technical analysis. No. But because I just ignored my gut feeling. I let pressure override my instinct. Now, here's what nobody tells you when you join the bank as a credit officer. You're not just analyzing numbers, you are reading people, you are predicting their futures, you are being asked to look at today and tell everyone what will happen after, say, 12 months, 24 months, or maybe 36 months from now. And you know what the worst part is? When you are right, you reject a loan. Nobody celebrates that, right? But nobody says, hey, you did a great job preventing that potential NPA. But when you approve something and something goes wrong, everyone remembers. It's like you are expected to be 100% right every time, but you're working with incomplete information, right? Time pressure, human beings pressure, and everything is so unpredictable, right? So if you are sitting there right now feeling that weight on your shoulders, I see you, I have been there, and I want you to know that what you are feeling is not your weakness, it's your responsibility. And it means you actually care about your work, you love your work. Okay, So let's talk about the things that actually make this job hard. Not that financial analysis part from that we read in the book, but the real ground check, and, let's say practical world reality. First, the target versus the quality dilemma. Every single credit officer I know is living in this paradox. You have aggressive business targets. We need 20% book growth every year, right? But we have a strict NPA targets like please keep your NPA below 2%. It's like being told to drive fast, but please be careful. And you are doing this on Indian roads, sorry, with unclear signals and everyone honking at you. I remember just one quarter here, and I'm sure you have been through this, right? Where we were behind on the sanctions, the pressure are immense, morning meetings become so intense, and every file was being fast tracked. Now, and in that environment, you know what happens, right? You start second guessing your own judgment, and that loan you would normally take maybe 3 days to evaluate, you are being asked to do it in one day. And that additional information you wanted to see, if we don't have time for that, right? And here's the thing, sometimes those loans work out fine, but sometimes they don't. And when they don't, the same people who are pushing you to sanction faster are now asking, how did you even miss these red flags? Why? So how do you handle this? Honestly, there's no perfect answer. Trust me, there's no perfect answer. But here, what I have learned and I can teach you is that you have to develop what I call your non negotiables. These are the things you will not compromise on, no matter what the price is. For me, it was three things. One is mandatory site visit, no exceptions. Second, the personal meeting with the promoter, looking them in their eye and asking the question that I deserve, that I need to know for my proposal. Third was if my gut screams so, I felt something is wrong, I write a detailed note explaining my concerns. Now, that third one is very critical because later, when someone questions your decision, you have documentation, and trust me, documentation is the best friend. And if it has saved me throughout my career, my advice to you is just master your documentation. There's no second thought, just master it. Now, the second is the relationship manager conflict. Now, let's talk about something uncomfortable, your relationship with your relationship manager. In theory, you are on the same team, right? But in practice, sometimes it feels like you are playing for opposite sides, right? The RM has spent several weeks, sometimes maybe months, building a relationship with his customer. They have promised them their word. They have built some trust, and now the credit person, that is you, might be the one who says no. I have had RMs literally plead with me, saying that please, this customer is our top client. If we reject this, they will move to another bank. If maybe you will miss the target, we will miss the target. Please just find anyway. And look, I get it. RMs have pressure too. Their entire performance is based on this business they bring in, right? But for our job, that is completely different. We are supposed to be the gatekeeper, the person who says, wait, let's think about this, right? But here's what I realized. The best working relationship happens when you explain your thinking, not just no rejected. But here's what I'm seeing. Here's what concerned me. Here's what we need to make this work. Here are the papers we require more. And now sometimes this RM goes back to customer, gets that additional information, addresses the concern, and this is the win-win situation for RM, for customer, and for the credit officer. Now, sometimes the deal does not happen, right? But at least there's a mutual respect, right? The RMs who I said I had the best relationship with were the ones who I eventually started thinking like a credit officer themselves. They would bring me only the good stuff because they learned that quality, what quality looks like, right? Now, the third is the personal guarantee conversation. This one, there is where it really comes literally human. You are sitting across this with a small business owner. Maybe they have built their company over 20 years. It's like their baby to them. Their entire life saving is in this business, and you are asking them to put their Personal assets on the line. Just remember this case. I remember just this my case. A father son partnership firm running a small packaging unit in Ghaziabad. The father was a guarantor in the loan. During documentation, I saw his hands were literally trembling, shaking when he was signing the guarantee document. And he looked up at me and asked, मैडम मैंने अपनी पूरी जिंदगी इस बिजनेस में लगाई है, अब अगर कुछ गलत हो गया तो मेरा तो सब कुछ गया, घर भी चला जाएगा. And in that moment, I realized this is not just a loan or a file. This is someone's entire life, their children's future, their retirement security. Does that mean you don't take the guarantee? No, please, huh? Guarantees are part of your risk management. But it means you better be damn sure you have done your due diligence properly, because there's a real human cost to getting this wrong. And sometimes it can cost you your job too. All right. So if I could sit down and with my younger self, who was fresh to credit, eager to prove herself, and here's what I would say to her. Lesson number one: please trust your gut feeling. It has data behind it, right? For the longest time, I thought gut feeling are unscientific, but today, with confidence, I can say no. Gut feelings are true. They are actually your brain processing patterns you have seen before. When something feels off, it's because your subconscious mind has picked up some inconsistencies that your conscious mind has not fully articulated it, right? Trust your instinct and then validate them with facts. That's true. Lesson number two, I would tell to my younger self is, it's okay to say I need more time. I know this is hard, especially when you are new and you are junior. There's a constant pressure to make quick decision, to not be the bottleneck. But you know what? It's better to say I need 48 hours to verify something than to approve something you're not comfortable with. Now I tell everyone that if you're not comfortable, please take time. Your reputation for thoroughness is more worth than your reputation for speed. Your speed, no one will count. But when you make a good decision, that reputation will go throughout your career. Now, lesson number three I would tell is uh, document everything. Being a banker, it's very important. You never know when it is coming to rescue. I know this sounds boring, but when documentation, it will save you when something goes wrong. Maybe sometime quick mortality account, or maybe sometime NPA. This will protect your bank, right? So your documentation is your protection. It's proof that you did your job properly. Write detailed notes, keep track for every conversation, save every email. And now, lesson number four: NPAs are not always your failure. This is very important. Listen carefully. Sometimes you do everything right. You do thorough due diligence, you structure the loan properly, you monitor regularly, and still the account goes bad. Why? Because businesses fail for reasons that are literally beyond your control. Maybe sometime a pandemic happens, maybe government policy changes overnight, or maybe his sudden major customer shuts down, the promoter has health crisis. Trust me, life is unpredictable, and same way the businesses. Yes, some NPAs are due to our poor credit decisions, but 99% not. And you need to be able to distinguish between I made a mistake or maybe circumstances change. Learn from your mistake, but please don't carry the guilt for the things that were genuinely outside your control. Now, I have spent myself beating myself over NPA in my portfolio, and I, I tell you from my experience, I tell you this: some things are beyond your control. So never think that NPAs are my failure. Right now, lesson number five, what I will tell to younger Sangeeta is, build relationship in your industry. This job can feel isolating, I know. You are the person who says no, you are the suspicious one, you are the one asking so many uncomfortable questions. But please connect with other credit officers, share experiences, learn from each other. You will realize you are not alone facing all these challenges. Some of my best learning came from informal conversation with other professionals. Hey, how do you handle this situation? What are the red flags do you look in your industry? We all are navigating the same challenges. There's no competition here. We can help each other, right? Now, you know what's interesting? We are called credit officers, but really, we are the risk managers. This is the reality. We are decision maker. We are financial detectives. We are psychologists trying to read the people's mind. We are fortune tellers trying to predict the future. I know it's funny, right? But this is true. And somehow we are expected to do all these things while also hitting the target, managing the relationship, working within our own tight timelines. So, how do you balance it all? How do you sleep at night? Here's my framework. And I'm not saying it's perfect, but eventually it had always worked for me. I asked three questions to myself. Question number one: would I lend my own money to this person? Question number two: can I explain this decision to my boss in 6 months if something goes wrong? Question number three I ask is: am I being prudent or am I being paranoid? And this has really helped me. Now, despite all these challenges I have talked about today, I actually think this is an incredibly important job. Think about it. When you approve the right loan, you are literally changing the lives of the people. You are helping someone expand their businesses, create more jobs, support their families, build something meaningful, right? I have seen businesses grow from 50 lakhs to 5 crore turnover. And the moment that you see, oh my god, this bank, this was my first customer, they have grown so much, and you feel the proud. We have seen they were a single employee, they become a 50% team. Now, that this dream of someone's you are fulfilling, you believe in them and you take a calculator, that's the powerful. Yes, I know our job is too stressful, but the pressure is real, right? We all make mistakes sometimes, right? But you are also the person who's making sure that money goes to the right places, that genuine entrepreneurs get their chance, that the economy keeps moving. And as we head into this our new year 2026, I think the role of credit officer is only getting to get more important with all the changes happening: digital lending, fintech competition, new RBI guidelines. The human judgment of a credit officer is going to be invaluable. So if you are if you are listening to this my podcast and feeling just overwhelmed, here's what I would want you to remember: you are doing important work, and trust me, this is really important work. It's okay to not have all the answers. Trust me, nobody does. Number third, every experienced credit officer has been exactly where you are. You are not just alone. Number four, trust your training, but also trust yourself. You know more than you think you do. And number five, last, be proud of what you do. Not everyone can handle this pressure, but you do, right? Every single day. Okay, all right. I know it's going so long. We have enough talk today, but I just felt like this needed to be said. We spend so much time talking about borrowers, about schemes, about technicalities, but we don't talk enough about the people making this critical decision under intense pressure. So I want you to hear from you. What resonates? What challenges you are facing that I did not cover in this episode? What would you like to tell me to talk about in my future episodes? Send me a message on Instagram, on LinkedIn, drop your comment here on Spotify, maybe on YouTube, or maybe you're listening on Apple Music. I will read everything, and honestly, your feedback shapes what I create. Until then, take care of yourself, make good decisions, trust your judgment, and please remember you are doing better than you think you are. This is Sangeeta, and this has been Smart Credit Bites. I will talk to you next week. Till then, thank you.